A very good evening, everybody. Welcome to the webinar held in collaboration with Trading Central, Finding Opportunities After Recent Market Sell-Off. I'm Ming Hui from Phillip Nova, and starting off the session today will be Ms. Dominica, who will be sharing with us some advanced plugins and features that Trading Central offers. After which, our main speaker for the night, Mr. Ming Lam, Trading Central Deputy Head of Research, will discuss potential opportunities in rebounding stocks using technical analysis. And before I pass this on to the speakers, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will address them during the live Q&A session towards the end. And now, without further ado, let's have Dominica kick the session off.
Hello, everyone. It's a pleasure to meet you on the second webinar this year. My name is Dominika Wach. I am a Client Success Manager from Trading Central, and I'm here today to tell you a bit more about Trading Central tools available for Phillip Nova MetaTrader 5 platform. First of all, I would like to show you where you can find the plugin on Phillip Nova website. If you are on the website, you can go to Platforms tab and then choose Phillip MetaTrader 5 Suite. Then you come up on this page and you need to scroll a bit down where you're going to get to the section of Trading Central indicators. And here you have a banner after which you can click download the Trading Central indicators. And plugin start downloading. It's a plugin suitable for Phillip Nova MetaTrader platform, which after downloading should appear on your platform that you already installed on your PC. So if you want to use our indicators or other tools which you can find within the plugin, you should go to the navigator window. The indicators you're going to find in the indicator section of the Trading Central. If you want to use other tools, which I'm going to show you in a moment, you should go to the Expert Advisors and again Trading Central. And now you should just drag and drop to the chart, click OK. And there's a pop-up window with 3 products from Trading Central. The first one is the Forex Future Ideas, which we talked about a bit before. Then we have a brand new tool that is available right now for Phillip Nova users, which is the Economic Insight. And I'm gonna tell you a bit more about it later during the webinar. And then we have a TC Market Buzz, which is, I believe, already known to you, where you can see the news and read the analytics regarding different kind of assets available for you to trade on the Phillip Nova platform as well. So I'm happy to pass the mic now to my colleague Ming, and we'll talk to you about Economic Insight in a bit. Thank you.
Hello. Hi. Good evening, ladies and gentlemen. Well, nice to see you again. We haven't seen each other, talk to each other for a month. So I hope, ladies and gentlemen, you are not shaken by the recent market sell-off. Okay, today, just like before, I prepared a lot of things for this evening, but don't worry, it will be simple and easy to digest. I will talk about this recent market sell-off and what happened for the past month. Well, as you know, the Russia-Ukraine crisis is impacting the market very hard. Okay, we'll talk about that. And then I will talk about the situation of those technology stocks which have been impacted heavily. Okay, and then I will take you to look at some sectors which are showing some signs of opportunities. Okay, without further ado, let's start. Okay, I choose my pointer. Okay, so this is me, Ming Lam. I'm performing my webinar at home, and I know you are also staying home, right? And well, we now in Hong Kong we have a surge in number of coronavirus cases, and well, we are approaching 10,000 cases per day. And I know in Singapore it is over 10,000 per day, and in South Korea approaching 40,000. Well, stay safe, huh? Stay safe, everybody. So now, most stocks, most of the index, and also today I will also talk about some commodities which you will like, just like gold, oil. Most of them, CFDs will be found in the Phillip CFD pages. Okay, you can take reference of that. And then, as usual, I would like to give a little bit a caution statement regarding TA, technical analysis. Okay, and today I will talk about stocks and other assets, commodities in terms of technical analysis, and also mostly in terms of momentum trading. Okay, if you are not quite sure what momentum trading is, easy. You just find out from the Phillip Lover website, YouTube channel, and you can retrieve our previous webinar back in last month, January. Okay, so I have to stress one more point that we can use technical analysis as a tool for our decision making, but it is not the only tool. Okay, we have also taken into fundamental analysis and also the macroeconomy economic situation, which I will take you through. No worry. Okay. Now let's get to the U.S. stock indices. I will talk about the 3 major stock indices. Okay. First of all, tech stock, Nasdaq 100 index. You see, not good. For the start of the year, we have seen this is updated. Okay, this is up to last Friday, and yesterday it was President's Day, and U.S. market was closed. So this is the updated chart, and we can see that at the start of the year we make a correction in tech stock, technology stock, of over 17%. Wow. You know what? If you see a minus 20% correction, that is not a correction. That will be a start of a bear market. Okay, so now we make a 17%. Okay, let's see what will happen there. And you can see MACD, technical indicator, and also relative strength index, RSI, both are turning to the downside. We have downward momentum at the moment. Okay. Next one, S&P 500. Okay, we have made a 12% correction, and still the index now is below both 20-day and 50-day moving averages. Same, the momentum is pointing to the downside. Okay. Dow Jones, the blue chip index, 10% should be 10% correction, and same, we are not seeing a reversal in momentum at the moment. Okay, so if you are standing on the sideline, not investing at the moment, I can say it is a good tactic, but we have to look forward. Okay. So, what are the various factors that are pounding, that are impacting the market? Today I will discuss three or just two, because this one, the first one, as you will know that the Federal Reserve, the U.S. Central Bank, has recently turned very hawkish, and this contributes to some of the downside of the market. And before, the Fed said the inflation was just transitory. Okay, now they changed the tone to be very hawkish, and now market has priced in. They say the 6th rate increase will come this year, 2022. Okay, we have been told. Okay, we have been projecting that, well, this year we are going to see 6 interest rate increases. Will it? So I won't go into details in my analysis this time, because I did it in the last webinar. You can trace it back in the last webinar. So I iterate my point is that we are going to see higher risk of economic slowdown rather than runaway inflation. Okay, I repeat, we expect the economy going forward to slow down, as well as inflation. And you know what? A slowdown in economy will drive authorities to do quantitative easing, fiscal stimulus again, which could be good for the stock market. Okay, and at this moment we have already priced in so and so 6 rate hikes for this year. In case they are doing fewer rate hikes, it could be also good for the market. Well, for this, I leave it for you to trace the economic situation of the US. And my colleague Dominica will show you how to use our features in MT5 called Economic Insight to trace the US major economic releases. Okay, I hand it back to Dominica, and then I will continue my presentation. Okay, Dominica.
Yes, thank you very much, Ming. So I'm back with you here, showing you the newest feature enabled for Phillip Nova clients from Trading Central. For the first glance, you can see, maybe spot, this is an economic calendar, but it's not your usual economic calendar. Why, you might ask? Well, except of the usual thing that you can filter by. So, for example, the dates, the countries that you are interested in, the events. We have some additional features. So let me demonstrate. If you are interested in the US market, let's set up the date for example, 24 to 25. And here we choose the United States, and you will get all the economic events from the calendar. You get also the importance, low, medium, and high. So we can check, for example, the GDP growth rate. And here, of course, you have a description of the event, and you have the 4 tabs, which are pretty unique for this kind of calendar. So if we click on the event chart, you're going to see the actual against forecast. If we click on the price chart, you get to filter through the different currency pairs that are actually affected by this particular event, and check what was the event price in the past. And now we are coming to I believe, the most interesting tab, which is Volatility. And this tab can help you prepare your trade if you are trading Forex pairs. First of all, you can choose from almost 170 pairs. Then you can choose the observation period. So there are calculations done. For example, if you choose one hour, we observe the event. For example, if it occurred at 11 a.m., the bar chart would show the volatility in the true range pips between 11 and 12. Then you can choose between the events. Is it if it was actual above forecast, below forecast, or if it matched the forecast, or all events. And then the whole magic happens here. So you can actually check what was the true range of pips, and yes, this measures the volatility on FX pair during the observation period. You can see how the price change. So it indicates in the end of the observation period if it was bearish or bullish. So the past 4 events were bearish on Euro USD. And it also gives you the volatility, the average range after the event. So it was 24 and 50.55 pips. So it helps you to prepare your trade before the particular event. You can measure your stop loss and take profit. And even if you click here, we can do it for you. So it's very powerful tool if you are planning to trade on economic events. And as Ming was just explaining, a lot is happening, and the fundamental events are really influencing the markets. Thank you for now.
Okay, thank you, Dominica. Well, the apps is very useful, right? Okay, now I jump into the second various factor that you would be very concerned about. That is there a war? Is there a war between Russia and Ukraine? Is Russia invading Ukraine? So maybe you know it better than I do. Well, we are seeing a standoff between the Russia and the US and the NATO on the issue of Ukraine, right? And today, this morning, maybe you know it, that we have a breakthrough in the situation, and Putin has ordered his troops as peacekeepers, okay, to enter 2 regions in eastern Ukraine, okay, and immediately after that we see the U.S. sanction the 2 regions, okay, and then of course we will see Europe will condemn the situation, blah blah blah, and you know what, ladies and gentlemen, to me, maybe you don't like my saying this, I will see this as a temporary end to the Russia-Ukraine crisis. Okay, and I expect not to see large-scale warfare or conflict as we feared previously. Okay, I repeat. In other words, I see that various parties, including Russia, the US, NATO, Ukraine, they have got well, pieces of what they want at the moment. Okay, Russia is going to help okay, to peacekeep to Ukraine eastern region, and the US is going to sanction the two regions, and there is no direct conflict with Russia, and also NATO has no direct conflict with Russia at the moment. So well, in my opinion, the crisis impact on the market is easing. Okay, from this point on, it's easing. Okay, in fact, you know what? I'm apart from the market, apart from trading, I'm also very interested in military and warfare. Well, we are now approaching spring. We are leaving winter and approaching spring. Spring, yes. And with this melting snow, it will be very difficult for the Russian ground forces to get into Ukraine in large scale. Okay, so in fact, we didn't expect a large scale warfare, like okay, and we are just a small military enthusiast. Okay, we are interested in military, but you know what? I think Mr. Putin is a very clever man, and he knows it. He knows it well, much better than we do. Okay, so no warfare. Okay, just the way as it is. Okay, at the moment, and then if this crisis, so-called crisis, we are not going to see a deepening of this crisis. Okay, this Russia-Ukraine crisis in Europe. I would like to turn your focus, okay, to other side of the globe, which is quite hot now. The APEC, yeah, Asia Pacific. What happened? Well, I show you this slide, and I leave it as your homework. You search for yourself, okay? You get to know more about this one, okay? Why Boris Johnson say Taiwan will be affected, okay? And also, do you know of this incident? A Chinese warship point a laser at an Australian aircraft, military aircraft, okay? Point a laser, okay? Do you know where did this happen? It happened at the northern part of Australian water, okay? We are seeing a Chinese warship over there in northern Australian water, okay? So, well, we are still seeing issues around the world, but at the moment, I can see that the Russia-Ukraine incident will be easing. Okay, the tension will be easing over there. And if you're interested also in international relation, interested in conflicts, global conflict, have a look at this one. Okay, so we come to then my third major bearish factor on the stock market. What is that? Yes, I mentioned at the very start of this webinar, that is the pandemic. Well, you know what? I've described the situation in Hong Kong, Singapore, South Korea, and also, you know, in Japan, even Tokyo, we are seeing over 10,000 cases Omicron per day. And now, Mr. Bill Gates, he is very involved in sending or donating vaccines over the world. And now he say, well, Omicron virus, pandemic, COVID-19 maybe easing, maybe fading away. But, and I don't like to hear this, but there will be potential for further pandemic going forward. Wow. And I will consider this another impacting factor on the economy and on the stock market. But as I said, as I emphasized, I see some pressure on the stock market to be easing due to this development in Russia-Ukraine crisis. Okay, I'm optimistic about that. And also regarding the interest rate hike, I also told you my point of view. I say the risk of economic slowdown is much higher than the risk of inflation. Okay, so now I hope I can help to relieve some stress on you regarding the sell-off in the market. For the following slides, 2 to 3 slides, I will talk about some individual tech stock, big tech names, okay, and see how they are impact in the past few sessions, okay. But I want to make a little conclusion here. For the long term, I'm still, as you may know, I'm always optimistic. I'm always bullish on the stock market despite recent sell-off. And instead of going to be bearish or going to short the market, I will at the moment stand on the sideline and wait for good opportunity to get into the market. I mean, I will go bullish. I will go buy some stocks. Okay, I will watch the situation at the moment. Okay, even though we are still seeing some pressure on the market. Okay, now let's talk about some stocks. Tesla. This slide I showed you last month. Okay, at that time I said our key support, short-term key support, is 960. Well, eventually it dropped across this key support, and then we should not be bullish for the short term. Okay, now this is the updated chart. We can see that share price is below both 20 days and 50-day moving average. And you can see now you know what it is, right? MACD and RSI, not good. Okay, we are still seeing downside momentum. Okay, so this is Microsoft. Last month I said we see a triple, 1, 2, 3, triple top on these stocks, and it will turn down. Okay, and also downward momentum at that moment. And the result is after our last webinar, the share price broke below both downside target. Okay, this is an update chart for Microsoft. Okay, we still see free head over here, and then momentum. You see red here, red histogram chart here. We are seeing the RSI 35. Okay, quite downside momentum at the moment. And now the stock price has crossed below the lower Bollinger Band, which add to the bearish bias of the stock for the short term. Okay, we would like to see the share price to rebound to 315 here. It is around the upper Bollinger Band. It is around the 50-day moving average. If share price going back to this horizontal blue line, always remember this private point. Okay, only a share price returning to this level, we will turn our wheel to bullish again. Okay, now test stock, and we can see that whenever test stocks are doing well, the leading sector in recent years are most probably the semiconductor sector. Okay, semiconductor. NVIDIA is the leading stock, is a leader in the semiconductor sector. This is an update chart, and we can see that a stepwise downtrend for this stock. Okay, share price below both 20, 50-day moving average, and you can tell me that the momentum not good. All right, so even the leading sector is leading to the downside. Okay, we could not be bullish at the moment. Okay, but don't maybe I make a caution statement here. Don't try to short the stock, such sector leader, because if it rebounds, it will rebound very hard. Okay, it could rebound about 5-10% in a day. Okay, so usually I do not suggest our friends to short sell stocks at this moment. Okay, as I mentioned earlier, I would rather stand on the sideline and look for opportunities to gear in. I mean to buy. Okay. Now, you know this one, FB. It has a new name, Meta platform, or Meta. Do you know what it is? Facebook. Yes, Facebook. Facebook. We see a huge bearish gap here at the start of February. Okay, and this bearish gap has never been filled. I mean, the share price has not yet come back to here. Rather, the stock price is here, 206. Okay, no matter how the momentum indicators are indicating, we do not advise our friends to touch a stock like this. Okay, this huge bearish gap still exists. Okay, well, we will look at other stocks. Okay, this is Facebook. Meta. Sorry. Now, how about another big tech name, Alphabet, Google? It means the parent company of Google. We see that also at the start of the month, we had a bullish gap here. However, this bullish gap has been filled. Okay, after several down sessions, this bullish gap has been filled. Okay, also we could not be bullish at this moment for this stock. You understand what I mean? Okay. Yeah. Momentum still to the downside. And I hope the market will how to say, to improve going forward following today's development in the Russia-Ukraine incident. Okay, now the last tech stock or ETF I want you to look at is this one, Ark Innovation ETF. It is the flagship, the biggest ETF of a well-known tech investor called Ark Invest. Okay, Ark Invest, a big fund company, which has been founded by Cathie Wood, the very famous Cathie Wood. As you can see, not good. Okay, MACD, and you can see the RSI for a long time has not got back to the neutral value of 50. For RSI, the neutral value is 50. We have not seen the RSI recover that value, 50. Okay, same, we could not be bullish at the moment. For ARK, I want to show you some more. Well, you know what? Back in 2020, 2 years ago, it was the top performing ETF in the US. Okay, up over 150% in 1 year, within a year, in 2020, 2 years ago. Okay, it was top, and also Ark had also some other ETF, just like the Ark on website. Website is about our web-based ETF, and some on the ETF on biotechnology. Okay, they were doing well, extremely well, back in 2020. However, this flagship innovation ETF has, well, following the impact on the technology stocks, has plunged 60%, nearly 60% from its high. Okay, its high is around 160. Now 64. Okay, so you can see the impact of the sell-off to the technology stocks recently. Okay, and I want to share one more about Ark Innovation ETF. This is Miss Kathy Wood. Okay, and a tweet is there is a heated discussion or debate on the social platform, on social media, regarding Ark Invest investment horizon. Well, Ms. Kathy Wood maintained that their horizon, their investment horizon, is 3 years to 5 years. Okay, but you know, well, I'm one of those fans of Ms. Kathy Wood. I know that she is very skillful in investing. Okay, but you know, you have to ask yourself if you can follow Ark investment style or not. Okay, I would prefer trading. I would not be holding 3 years, 5 years horizon. Okay, as you can see on our chart, we have the blue horizontal line. Whenever there is a cross to that horizontal line, for example, if we are bullish and it crosses the blue horizontal line of key support, we will turn to be bearish or not bullish anymore. Okay, we seldom let our loss to extend to 60%. Okay, and you also have to ask yourself which investment style or which trading style you are in. Okay, I can tell you that this investment fund, they have billions of funds to invest, and but we as retail investors, well, or trader, our funds are limited, and we have to take the stop loss. Remember the blue horizontal line very seriously. Okay, so this is a point of view from me. Now, we have seen how the tech stocks have been pounded, have been impacted. So, but I will maintain that I'm still optimistic on the long term, and I'm waiting for opportunity to gear in those tech stocks. But at the moment, I can point out that 2 stock sectors in the US are doing well. One sector is the energy sector, okay, oil companies, and also metal and mining sector. And any gold bug here? Any ladies and gentlemen, you like investing in gold? Don't worry, we will talk about that going forward. Now, so talk about the energy sector. This is a sector fund, okay, quite large. Energy SPDR ETF, XLE. Okay, the stock ticker is XLE. I also mentioned this in the last webinar also. This updated chart so that it is still holding well on the upside, okay, above the 20-day moving average. 20-day moving average is trending well as the 50-day moving average. However, take care about the momentum, okay? we can see that there is a little downtrend on the momentum. So well, this chart is updated up to last Friday. With the latest development in the Russia and Ukraine, we have another story in the oil price, which I'm going to show you. This is WTI US crude oil futures. Okay, this is updated chart. Well, I updated 2 hours ago, just before the webinar. Not bad, not bad. It is a one-day chart, a daily chart. Okay, and we are approaching the psychologically significant level, $100. Okay, do you agree? We're going to see that. And also the momentum indicators are well directed. Okay, so we are still bullish on oil price, and in this logic, you could be also bullish on oil sector. I mean the energy sector, oil companies. Okay, PetroChina, a stock listed in Hong Kong. It is an updated chart. Okay, you can see that it keep trading above the 20-day moving average. Although we have a down day, we are down 2% or 3% in HSI today, Hong Kong. Okay, this stock rose during the session. Okay, and yeah, not bad. I can see the momentum indicators, not bad. Okay, this is a oil company listed in Hong Kong. All right. Then we have the second sector, which I have seen some opportunity, is the metals and mining sector. Okay, this metals and mining ETF, XME in the US, the ticker. Okay, after, wow, a long-term consolidation, this is a trading range. Okay, we have lately seen a breakout, and also the momentum indicators are not bad at the moment. Okay, speaking about metals, so you will think about what? Of course, gold. All right, we have heightened geopolitical event tensions, and gold recently is doing well. Have a look. Okay, it is pressing against the upper Bollinger Band. Okay, remember the Bollinger Bands? This is upper Bollinger Bands. This is lower Bollinger Band. And according to theory, okay, theoretically, 95% of the time we are seeing the price trading between the upper and lower Bollinger Bands. Okay, now we are pressing the upper Bollinger Band here. And mind you, 1,916 was the high of last year, 2021. Okay, we are approaching that level. Okay, and also momentum indicator pointing to the upside at the moment. Okay, okay, so but I advise also caution on trading gold, because the geopolitical tensions will fluctuate a lot, and gold price will fluctuate accordingly. Okay, but well, but I can say the recent performance of gold price has just outperformed. Okay. Also, for metal, we have lithium, Ganfeng Lithium, a stock listed in Hong Kong. Okay, lithium is the material for making battery. Okay, EV, electric vehicle, use a lot of this. Okay, we can see that it is also breaking above a range trading. Okay, for several months, and also I can suggest that the momentum indicators are pointing to the right direction. Okay, this is Ganfeng Lithium. You can see that the 20-day moving average has crossed above the 50-day one, it is also a bullish sign. Okay, so now let's talk also about the US dollar. And US dollar last month, it performed very well in January. Okay, but at the end of January, it turned to the downside, and up till now, it has not regained the last height around 97.45. This is a US dollar index. Okay, and we are seeing that the 20-day moving average is about to cross below the 50-day one, and the momentum indicators so and so. So have a look. Why I point out US dollar? Because in the trading of oil, commodity, and the trading of gold, usually the commodity price are going in the opposite direction of dollar. Okay, if the dollar falls, commodity price will be up. Okay, usually. Okay, so I would like to turn your attention to the momentum of the US dollar. Now, at last part, I will look at some bank stocks, which you may also be interested. HSBC has just report its annual earnings today. Okay, well, good news is its annual earning has doubled compared to the prior year. However, the stock has just make a top and cross below the 20-day moving average. We have to monitor this closely going forward. Okay, but at the moment, I can see that the momentum is weakening. It's weakening for HSBC. Okay, so take care of this one. Be careful. I mean, another stock listed in Hong Kong, Standard Chartered. It looks good. It looks good. It's still trading above the rising. Not just we have to take care about whether a stock price is above or below the 20-day moving average. At the same time, we have to say that we have to find out whether the moving average is trending up or down. In this case, we see that 20-day moving average is trending up. Good sign. Share price is above the 20-day moving average. Good sign. Okay. Unless the key support at 52 Hong Kong dollar around the lower Bollinger Band, can you see that? And around the 50-day moving average is broken, we remain bullish on these stocks. Okay. Well, we can see that momentum not very convincing at the moment. Okay, but not bad compared to HSBC. And also in Singapore, we have OCBC. Let's see, still above the 20-day MA. Okay. However, we are seeing, well, just maybe a start of the weakening of the momentum. Maybe just after a very strong bullish one in the past 2 months, I can say. Okay. So be careful of that. And well, these are all I want to share with you today. And I know you may have some questions, so I'm waiting for you.
All right, thank you, Ming. We have one question, and it's in regards to gold. Our audience asks, for gold, the histogram seemed to be trending down despite the lines trending up. Is that a sign to take note as well?
Which sign? Which trending down? Can you, sorry, Ming Hui?
I'm actually not quite sure as well. Maybe the audience would like to clarify which line exactly? Or is there anything else you want to share from this chat, Ming?
Yeah, we can see the MACD I
Yes,
think the audience member, yeah,
mentioned it's the MACD histogram.
yeah, is trending down at the moment, and also we can see the RSI is above 50 and near to 70. Well, I think this audience member is very smart. He can notice this one, and as I said, gold is also tied to the geopolitical tension. Okay, so and if we see a dying down of the tension, or releasing or the decreasing of the tension, we can see gold fluctuate. But at some point of the webinar, I have also pointed out that we are going to see some issue, some stories, some interesting story in the Asia Pacific region. So I will say that we are still going to see some more geopolitical tension going forward. And for the goal, yeah, as usual, you keep the trading as this suggests. My key support 1,830. Okay, it's around the lower, it's around the 50-day moving average. Once the price cross this one, well, you have to stop being bullish again. And of course, going forward, you have to see if the MACD histogram continue to die down and the RSI going to drop across 50, it is time for you to jump out. Okay.
Right, thank you very much, Ming. Our next question is about reading the charts, actually. The question is asking, when candlesticks are hovering at the top of the Bollinger Band, does it mean price might be coming down soon?
Good question. Good question. Yeah, to some point it is, but it is not all the case. It is not all the case. Let me. Sorry. Now, can you see my chart? Now, look at this Tesla. At this portion, it will keep at this point. It cross above the Bollinger Band, cross above it. Okay, and also at this one. Okay, so the you have such a concern is a good thing, because as I said, those technical indicators, you could not rely 100% on that. Okay, it will be overshooting the upper Bollinger Band many times before it comes down. Okay, and it depends on your investment horizon and your risk appetite. If you say, oh well, the stock has shot above the upper Bollinger Band, okay, maybe you take some profit. Okay, you sell a part. Okay, and then if it goes up some more, you sell a part, and then finally, when it really turns, you sell the rest. Okay, we could not say, well, when it crossed once above the Bollinger Band, well, it should come down at once. No. It will in most cases, it will be at a very we can say uneasy. It will be at a very uneasy level for some time. Okay, for some time. So if just ask yourself to measure yourself your risk appetite. If you say, okay, this is enough for me, I would take some profit, you take it. Okay, don't wait, don't leave it there, and then when it turns, you still keep it. And this is well, you can be investing like this, but for trading, as I said, we are very religious to the stop loss. Okay, the key support or key resistance. Okay. I hope this answered the question.
Okay, thank you. This next question is in relation to the previous one. The audience member is asking what other indicators are there to check and buy only when price goes above the key support?
Sorry, Ming Hui, I don't understand the question. Can you repeat the question?
Okay, the question is, what other indicators should we check and buy only when price goes above the key support?
Oh, yes, and I would say you have to check if you are a momentum trader. If you are a momentum trader, you have to have a look as the can you see my chart here? Maybe I get you another one. Yeah. Well, in fact, the key support. I mean, if you buy, you have to take also into consideration those moving averages. Okay, and for me, well, in fact, there is a statistic showing that the most efficient indicator is moving average. Okay, I will make sure if I'm going to buy an asset or buy a stock or ETF, it should be well placed in relation to the moving averages first. Okay, just like gold price, this oil price. Okay, and then we have to check the momentum indicators, MACD, RSI. So I repeat, moving average is a first indicator you are going to make well, to notice. Okay, if price are still just like I point out in the very beginning, if price are still below 20-day, 50-day moving average, well, I will stand on the sideline at the moment until it turns. Okay, and the best setup should be when price is about to cross above the 20-day, 50-day moving average, and at the same time, the 20-day moving average is also above the 50-day moving average. Okay, I hope this helps.
All right, thank you, Ming. And the next question is, what does it mean when the Bollinger Band is narrowing or thinning? What will happen to the stock price then?
There is a saying. Well, in fact, our observation also confirm this one. Let me see if I can show you some example. Good example. When the Bollinger Band's upper and lower band narrow, it means the volatility is narrowing. It means the volatility is decreasing. It means that the market may be waiting for the next movement up or down. Okay, if those Bollinger Bands contract heavily, it means become very, very narrow. And when the energy release, it means when the stock make a decision to move up or move down, it will move in a very big extent. Okay, it will jump or it will plunge. Okay, this is the way you interpret the narrowing or widening of the Bollinger Band.
All right, thank you for your answer. And the next question is actually asking for your opinion on the KWEB ETF.
KWEB. KWEB. Do you mind if I check with my I don't think there will be in the MT5 KWEB. Is it this one? China, right? Oh,
yep,
okay.
yep.
China India. I know this is a very Let's have a look together. Wow, this red line is 20-day moving average, Bollinger Bands. Can you see that? Well,
Yes,
well, you know my opinion. It is quite subdued at the moment, and I haven't seen any sign that things are turning up. I don't see you know this MACD is getting well, light green is mean decreasing, and also the RSI is well pointing to 40. And well, my opinion, I will not jump in at this moment. All right.
Okay, thank you. And the next question is for you to have a deeper look at Apple and Alibaba shares.
Apple and Alibaba share. Okay, let me see if it has something here. This is MT5, and do we have Apple here? Yeah, I've got it. And template, I've made a template for our webinar. Yeah, here we go. And now I should make it day. Yeah. Well, to me, Apple has shown some resilient in the recent market sell-off compared to other big tech. For example, Tesla, for example, Facebook, Meta, or Google, Alphabet. So I can see Apple is it has done not so much compared to others. So well, it is a good stock, and if you like this stock, I think it is well, you can consider accumulate it, well, step by step. I mean, not getting in on one go. Okay, you divide your purchase on several times. I'm not very bearish on this one. In fact, for long term, as I said, long term, I'm still bullish on the tech stock. Okay, Apple is one of the resilient one. Yeah, I'd agree if you like to accumulate, but for trading at the moment, I don't see any advantage of trading this stock at the moment. Well, as I said, you can accumulate bit by bit for the moment. Okay, for another one, Alibaba. Is Alibaba Hong Kong or US? I expect to be Hong Kong, right? Do we have Alibaba?
Probably Hong Kong. Yes, Hong Kong Exchange.
Alibaba Hong Kong, and we have got it here. No problem. And chart window, and my favorite template of webinar. And one day, yeah, you can see that we have some lower highs. Do you know? It is a very bearish pattern. Lower high, 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 high. It means the rebound there has not been a sustainable rebound. No, there has not been a sustainable rebound regarding this stock. And well, you have just seen that Apple, it just fall for a limited percentage. But for this one, it seems to be well, you see, we have been falling for quite some time, over a year, and there's not a rebound in sight. I would suggest well, not to touch it at the moment. We still have other better one to bet on, right? Yes,
Okay,
Ming Hui?
thank you, Ming. Yep. We will conclude our Q&A session here since time is up. And for the questions that we couldn't get to tonight, we will respond to them via email.
Sure,
Yep.
sure.
All right, so everyone, if you have any further questions for Ming, you can send them to us via the survey that will appear at the end of the webinar. And this was a very insightful session, so thank you again, Ming and Dominica. And thank you very much, everybody, for your time tuning into this webinar tonight. We'll be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. That's all for today. Thank you, everyone, and goodbye.
Thank you. Bye-bye.